Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Wednesday, everybody. We have some things happening in the news. Before that, we have our term of the day, which is going to be, if I can pull it up, it is going to be the term resistance. So if you're a day trader, which I know there's a couple of you listening to this podcast who day trade or do options, you guys are familiar with the term resistance. Even if you do crypto, you're familiar with the term resistance. But if you're an everyday person, just a hardworking person, you're probably not familiar with it. And it's important to know, or at least important to grasp, be able to visualize. So resistance is one of the foundational elements of technical analysis. Remember, there's technical analysis and fundamental analysis. Those are pretty much the only two ways to analyze a stock or a company, pretty much. I mean, there's other sub ways to do it, but those two capitalize and encompass everything pretty much. Okay, so resistance is one of the foundational elements of technical analysis. Resistance is a price or price zone above the current market that contains the upside movement of an asset. Resistance is where selling interest appears over time, blocking further upside progress. So if you guys are talking to somebody who day trade, honestly, they're like CrossFitters. They love telling you that they day trade or that they do options. They love it, love talking about it. They'll use terms like candle or breaking the foundation or the resistance level. They'll talk about all those things. Really, just think about it like you're underwater and you are swimming to the top. And when you get to the top of the water, you take that big gasp of air, right? And you stop moving. That's how I like to view resistance. Resistance is this level, say it's $70 and something's at 68 and it can't quite crush 70. It can't quite get over that hump. It can't quite break the water level. That's the resistance level of a stock. And it's typically a zone, so it might be like 68 to 70, and it just can't seem to get out of that zone. It can't seem to get to 71. That's all resistance is. It's just that threshold that a stock can't break. And once you do break resistance, there does tend to be a sentiment that it'll keep going higher. That does tend to be the sentiment. Not always, but most likely breaking the resistance is a positive movement thing. Okay, let's get to the market indices here. Let's break down what's happening. So we're having a solid morning so far. U.S. stocks opened higher on Wednesday following the first back-to-back declines for the Dow in a month as investors shrugged off weak employment data, while Treasury yields continue to decline. The S&P 500 gained 22 points or 0.5%. It's right around, I think, 4,590, I think. The NASDAQ composite rose by 0.11%, 84 points, and it's around 14,312. The Dow Jones increased by 135 points, and it is about 36,253. Treasury yields continue to fall on Wednesday, with the 10-year Treasury down 4.4 basis points to 4.143%. Guys, basis points, I touch on that all the time. Okay, whenever I say 50 bips, 50 basis points, it's 0.5%. Okay, so 100 basis points, 1%. It's just fancy terminology they want to use to confuse you. Okay, let's see. Investors digest a report on private payrolls for today from ADP on Wednesday, which showed just 113,000 jobs last month. The latest sign that the U.S. labor market has been softening. The data arrived ahead of the closely watched report of the labor market from the Labor Department. This is due on Friday. Okay, real quick, we'll talk about this. I mean, I just think the market's going to be flat. Okay, it's going to be flat, probably 0.5% either or in the next month. Again, could totally be wrong, but that's just my sentiment. Typically around the holidays, things slow down. They don't really have big reactions. So that's just something to be, patient of, especially if you're trying to make these day trades or if you're really just paying attention to the growth. Growth really happens over time. Okay, it just does. So right now we're just going to be in this stalemate moment. I think it's going to move about 50 basis points. There you go. One way or the other. Not a whole bunch of movement. But guys, today we have a question. Okay. And this is, I was reading through Market Timer this morning And for those of you who don't know, I get a lot of my information or news articles from Market Watch. Sorry, not Market Timer. Man, I keep bringing that up. R.I.P. Bob Brinker. He did not die, but he did stop doing his monthly newsletter, and I loved reading it. He's been doing it for many, many years. Was an excellent Warren Buffett type investor, and I loved learning from him. Excuse me. Learning from him over the last decade or so. But here's a question that somebody wrote into Market Watch, and I think it just is a really good visualizer for people, and I mean that in general. Okay, so I don't care if you're 21, I don't care if you're 31, or if you're 71. This gives a really good picture of what questions you might have when you actually have money. Okay, so here it comes. We have about $3 million in real estate assets, single-family rentals, but owe about $900,000 on the mortgages. I'm 61 and my husband is 56, and he doesn't plan to retire until he's 67. We have about $300,000 in an IRA, 401k, and 403b assets. I don't take any income out of the rentals as my husband's income is $200,000. With our Social Security and pensions, our basics will be met. My question is, should I keep the rentals and turn them over to a property manager or slowly sell them over the next 5 to 7 years because I'm tired of self-managing? The current annual income after mortgages and all the expenses, but before income tax, is around $70,000. Could I get the same income or draw down if I sold the rentals and invested the money in stocks and bonds? Okay, there's a whole bunch there, but there's a couple of things I just want to touch on. First off, that has been my issue with real estate since I started my financial career 10 years ago. It's not easy to manage real estate. Okay, it's a great investment for a young person, typically. Okay, I have friends and people I went to high school with who own 6 properties and they love managing it. Okay, they love it. I don't own a home yet. I'm 31. I want as little responsibility as possible when it comes to investments. Okay, housing market, not as volatile typically as the stock market. 10 times, 100 times more responsibility, upkeep, availability, all of these things that this lady's talking about, she already wants to sell. Okay, she doesn't want to be managing these properties. She just said that. She's like, do I give it over to a property management company? That right there is enough for me to say, hey, look, you probably should consider selling them off just because the responsibility isn't worth it. Okay, $70,000 a year, and that's gross. That's not net. So that's before everything. And let me tell you something. Real estate is great if you like it. Okay, so I'm not talking trash on real estate at all, but I've been a renter. Okay, I've had roommates. It's I would not want to be a landlord. I would definitely hand it over to a property management company. But now here, let's talk about that. Property management companies. What is 70,000 of 3 million? I think it's like 2.5%, maybe 2%, somewhere in there. That's all they're making off of this investment. Okay, and they're having to pay taxes on it, mortgage out of that, a whole bunch of just clear. They don't really get $70,000, right? They maybe get 20. And I bring that up because property management companies, they're going to take 10%. Okay, so just right there, $7,000 out of that 70 is gone. So now you have 63. They're making 2.3%, 2.5% on this $3 million little rental company thing that they have. Right now, a treasury is at 5%. Okay, a 1-year treasury is at 5.3 or something crazy. And you don't have to pay federal, it's either federal or state income tax. I can't remember which one it is. But so now you're 5%. I mean, 10% of 3 million is $300,000. So they could effectively double their income off of the rental properties and pay less taxes. Well, effectively, it would be probably more taxes just because it's more money, but it would be way more streamlined. They wouldn't have to do upkeep. They wouldn't have to deal with the mortgage. They would be able to do so many other things. And if you don't like it, guess what? You can just sell it. You can do something different with the investment. With these houses, you can't really do that. Okay. This lady, she's in her 60s, I think she said. Maybe she's 50s. she's already done. I don't want to take care of these houses anymore. I'm tired of these these tenants. And I get it. I totally get it. I just wanted to bring that up because I know a lot of people love the house. They love property. They love investing in it. And look, it is a good investment, but it's not a great one. Okay? It's not a great one unless you love doing it. That's pretty much all I have on that. I mean, 2.5% income you're making versus 5% and something guaranteed. A treasury is guaranteed, folks, unless we go to World War III, in which case you won't care about your investment. It's guaranteed money. Okay, there's pretty much virtually nothing that has that. There's nothing else that has that. So I would say even if you hired an advisor, so like me, a treasury, I probably wouldn't charge that much, but an average advisor to do a treasury, to hold those assets, probably be 1%. So she's making 4%. She'd still be making more money. These are the types of things that people just don't look into. I mean, obviously she called into Market Watch to get advice on this, and they gave her pretty much the same insight, except for they didn't even mention treasuries. They just said, well, stocks are easier to sell. Housing requires a lot of upkeep. It's less volatile than the stock market, though. Guys, you guys can make your own decisions. Okay, yeah, I want you to work with me, but you should only work like this person. This person should have an advisor. And the reason I say that is because they're looking for income. How do I maximize income? I think advisors are really good at that. Not necessarily growing the money. I think very few advisors are good at that. Very few people on earth are good at that. But the income, finding a right income stream to sort of fit all of your needs and then your wants are covered, I think an advisor is good for that. Real quick, short episode today. I do want to talk about what we're going to do, I think on Friday, is we're going to talk about some individual stocks, okay? The pot stocks, the electric vehicle stocks. I really want to hammer home for you guys that stock picking ain't easy. It is not easy. All right. You got to really, really believe in what you're doing and have a game plan. I can't tell you how many clients I've had in this last year who've not liked their individual stocks and wanted to sell them. And now their individual stocks that we bought, the ones to replace the original ones, now they want to sell them. You can't play the seller's game because you're almost always at the wrong time. Almost always. So I would say, what was I talking about? Oh, yeah. We're going to talk about some individual stocks. Pot stocks are looking to hit. I've been talking about pot stocks for like 5 years now. I was way early on that. Okay. Guys, once marijuana gets federally legalized, it is a no-brainer that will be a huge cash cow. Okay. Huge cash cow. The other one is electric vehicles. If you all listen to this podcast, you know I love NIO, N-I-O. NIO is, really slumping. Okay. It's at about $8, $9 right now. They're trying to build what makes them different than Tesla and Rivian and all these other companies. They're trying to build like an Apple-like structure, meaning chargers, cars, a subscription service. They're basically trying to build spaceships, okay? And they're trying to build a real Apple-like model that no other electric vehicle company is doing. And don't try to tell me Tesla is, because Tesla vehicles, as much as I love Elon, they're just not well made. Okay, they fall apart on the road. It takes 2 hours to charge a battery on a cross-country trip. All those types of things. With NIO, again, the company, it takes 7 minutes to battery swap. Okay, they have battery swap stations. Tesla and a lot of these other vehicles, the battery is built into the chassis. So when that battery starts to lose juice, lose power, you just have to get a new car. Okay, at NIO, it takes 7 minutes to swap your battery out. Boom, boom, boom. That's it for today, guys. We will talk individual stocks on Friday. As always, invest early, invest often. We'll see you then.